Okay, this is a review for Friday the 8th of August. Starting off with what my expectation was going into the day, that is this daily candle, which I think that's the completed candle. But this is when I got to the charts just at 3 a.m-ish, just after 3 a.m. So high time frame within this consolidation. We did recently sell off to a discount of this consolidation. So from that low to this high, which did take out lows, that counts. So you see we did hit that with this sell-off here. We're aggressively moving back up in quite an aggressive fashion. But because we are in a consolidation on the higher time frame, I am expecting us to reach to extremes of the ranges and then pull back to the opposite extreme. And for that reason, looking at this low down here, I can see a likelihood of us dropping down to take out these smooth lows on the high time frame. So that's kind of my overall bias. After the sell-off, we've had this aggressive pullback, and it's a lot stronger than I would have expected, but being in a consolidation, it does make sense that we're likely to reach extremes of the range. I was watching this old previous week high, looking for us to reject above that and head lower. However, we've continued just pushing up, but as you can see, leaving these smooth lows behind us as we go. And that really stands out to me, as a lot of trail liquidity will be below those lows following this enticing rally. On the 4 hour, you can see that same kind of theme with us having this big rally, engineering this low. We do drop down to take out these relatively cool lows on Tuesday this week. But then since then, just kind of moving our way higher, quite high resistance, up into a premium of this range and hitting this old high. The 1 hour. The 1 hour was quite interesting to me because, and this actually set a lot of my bias. I am bearish, as I mentioned, but on the 1 hour you can see this is the previous day high from Thursday. If we draw that out, we actually rated that already. We already rated that right at 1800. We sold off. We have this impulse low from Thursday, and I wanted to see that as a potential draw on liquidity. And the reason why is because it's a very obvious sell side pull with an enticing rally. We dropped right back down to that low, but then failed to take it out on the currency before working our way high in a very high resistance fashion. So in a way, it's looking like it might want to roll down there, and I really like that narrative in this area, especially since we're just taking this high. Then the other thing I noticed was that we have this hourly low at 2200, made perfect equal lows with 2300 down here, so that was another point of interest I had. And you can see that here with this impulse low, the 2200 low and 2300, making an impulse low with an aggressive rally into the range, hitting this premium buy side as well. So initially I thought, okay, I want to see it go lower. And then as we play forward just 2 candles, or 1 candle even, you can see that we actually ran straight back up. This was initially an intermediate term high. We then broke that really aggressively and printed this long M15 wick that took out this high. And this is when I looked for my first trade. And I actually flipped my bias on the short term from bearish to bullish because, one, we are in an uptrend on the high time frame, showing a lot of strength. We did raise this previous day high at 1800, but price has a tendency after rating a high or low to then return back up for another sweep. So I thought that was a likelihood. Then we've also got this very obvious impulse high sitting up here as well. That really stood out to me, especially seeing as we just balanced this range entirely and then traded lower, making this intermediate term high that took out this high, but then breaking through it like that. I was beginning to shift my expectation to bullish. Then finally dropping to the 2 minute. I need a quick indicator for this to help illustrate what I'm looking at. The next thing that jumped out to me was using the opening prices and the hourly opening prices, is that 1 a.m. dropped below the open, engineered this discount sell side. 2 a.m. just above the 1 a.m. low, enticed immediately to a premium of that level, and spent time at a premium. So trapping traders long, its sell side is developing below this low. We then sell off to a discount below the 2 a.m. open and accumulate discount sell side at a discount before rallying high. So that was also showing a signature of accumulation as well. Plus we just broken all these arrays, and I had a clear draw that was in alignment with the upwards trends that we currently have. So right here flips to a bullish expectation on price. And that was the points of interest. So wanted to look for a long initially, but for the day in general on gold, I was looking for shorts. So now across to what actually happened. So I'm going to summarize what actually happened, then mention specific events that shaped the day. And then the high time frame order flow and sentiment going forward, and what my expectations are there. But as you can see with the day, it didn't really go anywhere. It kind of just consolidated within this range. Very much range bound consolidation. So didn't end up hitting these relative lows down here or moving above the high we'd already made. So really staying range bound. We did take out the Asia low, but as pretty much a seek and destroy profile. Just as soon as we hit the extreme of the range, we just run to the other extreme. It still offered some really nice setups though. On 15 minutes, if we draw this out, you can see the same points of interest I had before. And that's that relative equal low down here with that 2300, then with the Asia low down here. So, but that is being a short-term draw that out. And then this is the 3 a.m. rally through that high that prints that long wick. I'm going to drop down. So yeah, pretty much what happened is we just didn't go anywhere, range bound, extremes of the ranges. But it did offer some beautiful setups, including this long that did play out, and then some shorts later on. Bit confusing in this New York session area. However, I was focused on NASDAQ at that time. Specific events that shaped the day, they are pretty much just the extremes of the ranges, and the fact that each time we hit the extremes, it's bounced back. So the high time frame order flow and sentiment going forward. I have a quick look at the weekly and the daily together. So weekly, very much in a range bound consolidation. However, the fact that we printed this long wick, gap down, then the very next week we're just rapidly overlapping this wick, tells me that there's a high probability we want to take out this wick high. Once we do that, since we've already come to such an extreme of the range, we've already hit this previous week high with this week, then there could be a likelihood that it pushes through. But since we have been within this range bound consolidation and we do still have these equal lows down here, I'd be monitoring what happens when we hit these highs, if it wants to roll over, or if we push through with some speed, then I'd look for a slight pullback for a long into all-time highs. But at the moment, looking very strong on the weekly. And then on the daily, what they just told us with that long wick closure, especially on a Friday, a lot of the time that creates the narrative going into the weekend of a bullish rejection. So if we are looking to target trailed stops, such as we see right here, with this aggressive rally and then smooth lows in the daily, trailed stops will be accumulating below these lows. When we printed a candle like this on a Friday with a long wick, then that creates a sentiment that there's going to be a lot of traders looking to get long. So I'd anticipate early in the week a beautiful sell-off into the sell side. So that's the sentiment going forward. Influence of the economic calendar for today. So I'll drop back down to the lower time frames and we can look at what actually played out. As you can see, it was very much range bound at the end of a week. And as far as the week goes, so I'll put on I'll try and make this a bit cleaner looking. So as far as the week goes, this was Monday over here. Really hasn't had much expansion this week. But we have been hitting premium arrays, but we were at an extreme of the range. If there was going to be a trade today, I would have expected it just to be a flush out of the sell side after such a week of this, but they must be saving that for Monday. And if we look at the economic calendar, we can see that we didn't really have any events today for the US dollar. So if there were some more volatile events, that might make more sense. If we skip forward to the next week, we see that on Tuesday we have CPI. So that we could possibly be saving all this liquidity for then. So for trades, doing some trade breakdowns now, I'm going to start off with the first trade I took, which was this long. And I already mentioned part of the reason why I was looking for it. High time frame trend was bullish. We have this previous day high, and as you can see, we hit that nicely. We also had this impulse high sitting up here, which aligned with that. Although I was bearish on the high time frame, the fact that we pulled back into this range created this intermediate term high and then broke the low, you wouldn't want to see this taken out. The fact that we took it out was indicative of bullish prices, especially after this narrative that I mentioned of 1 a.m. engineering the sell side pull, 2 a.m. enticing longs before accumulating and displacing higher. So I was looking for a long up to there. Another thing that stood out to me was the fact that if we drag this across, if you see that, especially on the 15 minute, if you look at that on the 15, that doesn't look like a reversal. Just the fact that we have this pullback and then we wick above that high and then start trading lower, that's just usually you'll make highs and lows with a more bold face body candle, and we don't have that here. So that was also a suggestive of us enticing traders to get short with this bearish rejection candle. So I wanted a long. Now drop into the 1 minute. I just replay the chart so I don't have to drag across each time. So on the 1 minute, what I was looking at is how 3 a.m. had created this beautiful impulse low before ripping up, and then we'd pulled back. If you look at this range and you think anyone chasing this long, where do they put their stop loss? Well, they could put their stop loss down below the low, or more likely if they're going to want to trail it. And if they trail it, it's the only swing low on the 1 minute time frame is this swing low. So as we were consolidating in this area, I knew that I was wanting to find a long. I also knew that there's no way I wanted to go long right above this low without us taking it. So what I wanted to see was us to drop down below this low and then reject it. And if we were to reject it, I was going to go and get long. As we drop down, we consolidate, pull down lower. Everyone's waiting for the continuation. Anyone who's looking for a long, they're looking for a continuation. So when we get this rally up here, an enticing rally, everyone's going to pile in right at these highs, put their stops down here, and then as we sell off aggressively, all the sell side that was developed down here on this enticement gets taken out. Anyone who was long in this run up are suddenly taken out, and all of a sudden this looks very bearish. Now everyone's thinking, dang, I knew it was a short the whole time. So whoever was long up here, they're now going short right here. So that's exactly what I want to see. I saw these initial rejections with the wick before this candle at 3:40 a.m. drops nice and aggressively down, spent the majority of the time in the low end of this candle, which I'll show on the 15-second chart, before we had this nice reversal pushing back up really nicely. And if you look at this low, you can see this enticement from 2 a.m. If you look at the base of that enticement, you find the impulse low, and you can drag that across and mark it as a old low. Put it on this time frame only. See, we dropped nicely into that and got a beautiful rejection up. The entries came mostly on the 15-second. And this is also below the midnight price. But on the 15-second, you can see that enticement, spending a bit of time up there, leaving smooth highs as well, that's key. Dropping down, hitting the impulse low. These are those initial wicks that we see in the 1 minute. Very shallow, however, so not showing what you'd want to see for an actual rejection. You want to see something a bit more obvious. And then we eventually get that at 340. Nice aggressive dump down, hitting that low. A lot of time spent below it. We did close just below this impulse low, and I actually considered that to be a signature in itself. When we close below an impulse low, usually that will mean that we're going to go lower. But if we close below an impulse low, then immediately, like instantly, reject straight back up, then that indicates a longer term swing point is potentially formed. It's exactly what we see here. The displacement up. We have a beautiful market structure shift through this impulse high. And once we get that shift, you can see us put a down close candle and then start pushing back up. That was the perfect place to be getting long. And you can put a nice tight stop, anticipating we should leave this wick unfilled. It should not come back down here. If you had a candle on the very next candle, drop down and come below this low, then it's likely going to close down there and push lower. So the facts that we had this narrative of everyone being trips long, now everyone shorting after realizing they had been tricked into going long. Everyone's going short, and then we start pushing up aggressively. You can really trust getting in here with a nice tight stop and catch this run up. This would have also been a potential entry, and a nice institutional order flow entry drill at this old high. So hitting this high, usually if you're bearish, you'd want to see this fair value gap stay open if you're bearish. So the logic behind this as an entry model is when we hit a key swing high that is at an extreme of a range where you wouldn't want to see price go past. So already we don't want price up here. If price does come this far and you're bearish, then when it hits this high, you'd want to see a nice strong rejection lower. When we fail to do that, that's an entry model in itself. So that would have been a beautiful entry. You could put a very tight stop below the midpoint of this wick. So that would look, let's say you were to get long there. You can put your stop right about there. That gives you a nice 3R at least. And then the other entry was down here with a stop below that wick. So a couple of very nice entries here in a beautiful trade. For execution of this one, I actually only I only took it on Top Step X on MGC. However, if you look at on the practice account, and that was because if you compare it to gold, and we look at the same place, you can see that the charts look completely different. This is the exact same moment. I bought right here on this candle, and as you can see, it rolled over, made a lower low, while gold was all the way up here. So that's why I don't trade using the GC charts. Usually the correlation isn't this bad. Usually it's actually pretty much the same, but on this particular occasion, absolute rubbish. So I actually avoided trading gold all day because of that. Next trade I will go over. I'll just go over one or two more. The next opportunity that's really stood out to me was this short up here. We'd hit all these premium arrays. If we look on the 15 minutes, that was this area right up here. We'd hit all these premiums, swooped back above that previous day high. I didn't expect that we needed to take these highs out since I was wanting to see these lows taken. And so the fact we're hitting the previous day high and this impulse high again, I really like that. We also had 3 a.m. being a big up closing candle, and so I expected that 4 a.m. could trade lower quite easily with having a very minimal wick. Then if we look at all these wicks in here, and then this aggressive up closing candle, enticing longs at that premium before working back into the range. And so this, I really liked the look of this as a reversal, and I don't usually use these, but I was using this, watching this fair value gap and watching if we were to invert it in an obvious manner. As you can see, we wicked through it, already filling in that, and then closing below it initially, trading quite low. My eyes jumped straight to this impulse low. Whoever's chasing this big green enticing rally, have their stop right down there. We then trade back above the fair value gap and then take out a short-term high and immediately reverse and close back below the fair value gap, also below that order block. So now we have a clear order block formation right there. I was looking at that. I was looking at the facts that we had a fair value gap that had seen buy side, sell side, buy side, sell side, buy side, and then sell side again with this this high. And so I shorted it right there. On the demo account, held through all of this, probably because it's on demo, quite easily held through it, but also because this impulse low really stood out to me that whoever was chasing this long has his stop below this long wick before the big rally. The fact that we came so close to it, we were respecting this PD array, we were respecting the order block, and also we were respecting the midpoint of this wick. That gave me a lot of confidence that we were much more likely to hit this low than come to my stop loss, which was sitting just up here. Yeah, stop loss just sitting up to there. And so I was very comfortable holding through this, eventually selling off. This also becomes a sell the dip model, sell the dip entry model or framework. This is where we have an hourly opening price open up, create a low after a big rally. So creates a low that indicates a place for people to trail their stops. And then we hover above that low for 20 or more minutes. So we drag that across, 22 minutes. We then drop below it. At that point, I'm expecting this down closing range, more likely just the lower half of that, to hold price below it. A lot of the time, an entry would form right here. This particular scenario remained very heavy, but that gave me a lot of confidence to hold through this entire sell-off. Executions, you can see that execution right here. Let's see if I can grab that. So that's the fair value gap. And we have that super above the previous day high. I shorted right in the closure of that candle. Held through all this, began selling off. I actually walked away from the charts here. Otherwise, I would have been taking a partial as we dropped into these lows. So when I came back to the charts, we had been consolidating a bit and we weren't really moving. We'd already hit places where I'd want to have partialed. So I took something off there, just 1/3. Then as we sold off into these lows and hit this old low again, I took another partial take profit there. And then as we hit these lower fair value gaps, and finally I took a partial as we approached this impulse low. The final piece, I trailed really tight. After making this low, I recognized we had a deep discount of the range. We had hit this low, so I trailed the stop quite tight behind the 2-minute candle and got stopped out at the lows. So really nice execution, really like how I did that. And yeah, so things done well. I did well to be patient in this area, but then execute on what I saw when the narrative made sense. I did a really good job with not feeling uncomfortable in this range because I recognized that we were respecting the premium wick CE and the fair value gap, and that we're more likely to head down to this low than anywhere else. Next thing done well was to have anticipated that this could be an extreme of the range, taking a partial down there, and most importantly, only trailing the stop nice and tight behind a 2-minute candle when we were at that deep extreme of the range. Worked out nicely. Room for improvement would have been simply to have been watching the charts a bit more while we were in this range, just keeping an eye on it. This is a practice account, so likely would have been watching it a bit more closely in the live, but if I was watching it a bit more closely, and then also as we sold off, not jumping out as soon as we dropped that low, but looking for momentum and reason for us to keep pushing, especially after spending so much time up here, I would have wanted to have recognized, okay, this is now developing into more than just a scalp down to this low and below, but this is actually showing that this is a sell the dip framework, and we have now trapped longs up at these highs, so looking for that continuation, and likely, would have been taking a partial at this lower one rather than just up there, but looking for some speed through the initial low, and then that telling me to continue holding to at least this low. So yeah, that'll do for that trade. And last trade, and this was probably the trade of the day. So as I mentioned, I was bearish on this day, and if we look at this range on the 5-minute chart, we can kind of see that I'm just going to replay again. So this was that sell-off that we just talked about in this area, sold off, but if you look at this range in here, that doesn't look very bullish. The fact that we closed so deep within this bullish order block, below all these PD arrays in a very well-balanced range already, working way into it, it's showing bearish signatures. And on the way down, we're engineering a lot of smooth highs, so we've got a lot of premium and internal range liquidity. 5 a.m. rallies straight up to hit that. Then as we are hitting it, we are pulling back and leaving these impulse lows and then moving higher. We then pull back again, leave another impulse low, continue enticing higher. Trailed stops are going to begin to pull just below these lows. And as you can see, we never actually came down to take out a really obvious sell side pull for trailed stops. We're hitting premium buy side, we are bearish on the day. So that's what I saw. And then what's locked it in for me was the 5-minute chart. And this is a framework I have called the long wick plus bull flag. It's where we have a long wick and then we don't trade into the wick, but we begin to consolidate at this end. That tells me the narrative of traders see this as a bullish rejection, and then they see a bull flag, which also suggests that traders want to buy it. And so if everyone's going to be buying this, everyone who's trading basic chart patterns and candlestick patterns, that is, if everyone's buying, that means and we're at a premium and we're bearish, and we're also hitting this premium internal range liquidity, that means that this is a great place to be selling and accumulating a short position. Obviously, just above us, we had all these smooth highs and also creating smooth highs here as well. So I didn't want to just jump in short. I wanted to wait for it to offer me a valid entry model. So we had the framework, long wick plus bull flag. Now I just need an entry model. We also have the framework of trailed stops below these lows as well. For the entry model, I identified that we had this really obvious impulse low on the lower time frame, which is essentially a fractal model of this 5-minute impulse low and then consolidation. We have a 1-minute low consolidation. Whoever's been chasing this run up and this rally up here as well, they have their stop loss sitting below this swing low. So what I wanted to see is if I was bullish and we hit this low, I would want to see us rapidly reject higher. I wouldn't want to see us trade very deep into the range. I want to see us hit this low and then move lower or high quite quickly. So what I wanted to see, since I'm not bullish, is that to fail to happen, for us to soup this low, begin to move higher, but then close back below that low. I patiently waited throughout the entirety of this range, not trying to chase it, not wanting to jump in early. And then as soon as we got this entry, we got the soup, I was watching, and we closed back below. I was anticipating that to happen. I didn't worry about the fact that we had all these smooth highs up here. I was focused on the draw on liquidity being the lows and these obvious pools of liquidity where sell stops will be trailed up during this rally. Got that entry model, went short right there with a stop loss above the failure swing, and targeted my main target being that wick low, and then looking to hold a runner. So a really beautiful trade. As you can see, it played out really nicely. And there are a few nuances on how I could have maximized this trade, which I'll go over soon, but I'll first show the execution. Here we go. There were a few trades that took in between times, as you can see. This just being a short from internal range. It was actually an accident again, that one, I think. But then I added to it in here using a similar kind of framework with a failure swing below this impulse low. Caught a nice short down there. And then took half off. The rest stopped off out at break even. And then that's the consolidation. That's the impulse low. We get that closure below. The very next candle drops immediately, and I jump in as soon as I can. And yeah, I just took the full position off down here for an easy 1-to-1. Like I said, this is a demo account, and it seems when you're on demo, you're not as motivated to watch the trade super closely. So I probably just walked away from, put the trade on and walked away from the charts. But still a really beautiful trade, really clear framework. That's the main thing that stands out to me. I had a very clean narrative, a clean framework, and then a clear entry model that I patiently waited for. And that's why this trade worked so beautifully. I'll quickly go over how I could have executed it better, and then that's all for gold. So what I did well was the patience, identifying the framework, narrative, and the entry model, waiting for that setup and executing it. All those things done very well. Room for improvement is obviously watching the, monitoring the trade and, watching it, not just blindly going, oh, I'll just quickly put on a trade and then I run off to get a coffee or something, which is probably what I did. But rather than doing that, identifying, okay, we've got these traps longs up here. This framework in itself, you are expecting it to continue to push lower. So what you do is, if these are traps longs above this wick, then that makes my invalidation for continuation is now the midpoint of this wick. So rather than taking it all off down here, I could have looked to put a stop loss at a premium end of this fair value gap. I could have had a stop loss up here. I could have also watched this impulse low, seen do we show willingness to reject this low, especially after this wick takes out the most discount impulsive looking low down in this area, begins moving higher. When we start rolling over, that should really be telling me that, yep, it looks ready to roll lower. Could have potentially jumped in with some more size as well. As far as trailing using a 2-minute stop loss, right here, this is a 612 candle right here, and then that's 613, meaning this is 614. 614 does take out the 613 low and then run straight to the high. So it does take out the previous 2-minute candle high, meaning that after hitting these deep discount lows within this dealing range, you don't want to be just jamming your stop up right super close. You want to give it some space. But once we do accelerate and hit external range liquidity, at this moment right here, it becomes valid to start trailing using a 2-minute stop loss, meaning that at 616, stop loss will be there. As soon as this candle breaks this candle's low, it goes there. And then once we have the next candle print, so that's the next 2-minute candle, and then 6:20 opens up right here. You then trail your stop down to here. Obviously, as we're hitting all these, having these expansions lower, aggressive moves, you want to be scaling out into them. But when we pull back, it means that your stop is completely safe. You get to sit through this entire move. Once we break this low, you're then moving, trailing your stop down to the next 2-minute candle high, which would be this one. Once we break this low, the same thing again. Actually, sorry, down to there. Once we break this low, you then look back, okay, from this candle. If we look back for the previous 2-minute candle, it makes it this candle here. And so, as you can see, using this method, you end up trailing your stop all the way down to here. And then we pull back without breaking that 2-minute candle low. Once we break that low again all the way down here, you're then trailing your stop to this candle. Once this candle here gets broken by the next 2-minute candle open, the 7 a.m. candle, trail your stop down to here. So all of a sudden, if I had trailed my stop that way, you're guessing if my initial target was just from here to here, it's just 2.35 points, then all the way to where I would have got stopped out, just using a trailing stop, that is almost 6 times, or about 5 times the distance. So looking to add in this area, recognizing that this framework and narrative is suggestive that we shouldn't get back above this wick. It's a really good place to add. But even if I was to just hold, I want to be holding a partial and then using that 2-minute trailing stop to really maximize that trade. Okay, jumping across to NASDAQ, and I'll just make this a very brief review for NASDAQ because I spent a bit of time with gold. That's for this Friday. That's, you can see the daily candle here. I've replayed back to the 9 a.m. candle over here. But just going over my expectations, obviously extremely strong on the high time frame. We had just had this pullback, taking out a bunch of sell side, and then started showing aggressive moves straight back up from Monday. Monday once again making the low of week, as it does, I think, about 70% of the time that we have a bullish week. Monday makes the low. So expectation was bullish, especially after both Wednesday and Thursday continue just pushing higher, not really slowing down towards this buy side. So higher time frame, definitely looking bullish. We can see that we'd already taken out this old impulse low in the pre-market, or at the previous day. So the previous day had this sell-off, pull back into the range. And after the sell-off, I'm looking for trailed stops. Where do trailed stops reside? So if we look at the 15-minute chart, we actually rallied up into the close the previous day. And then I'm looking back in this range. Okay, where the most obvious spot for stops? Well, this really jumped out at me, this buy side pull up here. And I wanted to see that get hit. I really liked the fact we had these relative equal highs engineered overnight, just short of this impulse high. That is actually a framework of mine called the Delirium framework. Relative equal highs below an impulse high, so I already had a framework in mind. I was aware of the fact we had the sell side down here from the regular trading hours even, which was this low, but sell side, and then we made relative equal lows with it down here. So I was very aware of that, and I had that noted on my chart as a potential draw that we could drop into. But then I recognized that we had just taken out all this internal range, taken out this really nicely. We also even had SMT on the lows. So you can see E is failing to take out that 2:45 a.m. sell side. And if we drop to the low time frame, we had just had this aggressive sell-off at 8 a.m, scooped out all of this internal range below the midnight price. We had had this discount sell side engineered at 3 a.m, 4 a.m, then held at a premium at 5, 6, and 7 a.m, 8 a.m. dropping to a discount to accumulate all this discount sell side. We then have the idea of there being nowhere for trailed stops. We're now consolidating at a deep discount below sell side. There is nowhere for trailed stops. We have a clear buy side draw up here as well. So everything was setting up for a very nice long. So that was my expectation, is a long with the potential of dropping down here. What actually happens if we jump over to this chart? I'll jump across to NASDAQ, go to the 15 on the left, 1 on the right. I'll get out of replay mode. Beautiful push up, really strong push. And as you can see, looking back at that same area, we actually did get that beautiful expansion at the 9:30 open, respecting this. And looking back, we can identify how it actually played out. Taking out all that internal sell side down here. We can also look at this old impulse low that we had previously rated on this candle. And then we're referring back to that old low here as well. That's something else to note. But if we draw out our draw on liquidity, and then the previous day high is above that, we can see that we consolidated within this range before expanding out of the consolidation, returning to the mean threshold of the consolidation, and then just pushed our way and worked our way higher. The way you identify that there was going to be a bullish expansion out of this consolidation is by understanding the phases of price delivery and then also understanding SMT. So price only moves in a few phases and always in a certain order from each phase. From a consolidation, it always goes to expansion. Expansion can go to a retracement or reversal. A retracement, or reversal, and then expansion can also, sorry, my brain just fried itself. Expansion always goes to, consolidation always goes expansion. Expansion can retrace, can reverse, can consolidate, and then expand. But it all ends back at a consolidation. And that always goes into a reversal. But you might say, well, what about this? We expand lower, then we reverse. We can consolidate and reverse. But actually, if you look at the SMT, you can identify if we have already reversed or not. And then this particular case, the fact that we have SMT on the lows tells you that this is expansion lower. We then have SMT with these lows, so that becomes your reversal right there at 840, reversing. And then after reversal, how you identify a consolidation is that we're disrespecting discounts and premiums within that range. So in that case, you can see this is a very balanced range, and here you'd expect this to remain open as a breakaway. It doesn't at all. We make intermediate term lows, make relative equal highs, break the intermediate term lows, and at this point here you can tell that, okay, it's consolidating. However, because of the SMT, expansion should be next. Once we get the expansion, mean threshold, it should hold to the midpoint of the consolidation, and you want to be buying as close to the midpoint of this range as you can. And as you can see at 934, we drop beautifully into that, and there's a beautiful long up into the buy side. Really fast. High time frame order flow going forward, pretty easy, just bullish. at all-time highs. Friday, pushing up really aggressively into the highs. I wouldn't be surprised if we do gap up on Monday. We could see a pullback sometime during the week. I'm not sure, but at the moment, there's no reason for us to be looking for any kind of a short. I'd just be looking for us to reach nicely above these highs. We have 24K sitting just up here as well. Very high chance we do manage to reach up to that. Influence of economic calendar on this day. As you can see, it acted a lot nicer than gold. Just continuously making higher lows, higher highs all day. Any specific events that shape the day? Really just that sell-off ahead of the open that accumulated all the sell side. Really set the narrative of us expanding higher. Then the facts that we pushed up with this so hard into these highs. One event that really stands out to me that did shape today, if we compare this to ES really quick, I'll drop down a bit. ES had a really obvious draw on liquidity, and to me that was this impulse high. Oops, I don't know. So we had this impulse high sitting up here on ES, and the fact that we had such a sharp sell-off, we came really close to it here and then started pulling back. It really stood out to me as a very high probability draw on liquidity, and that was right at this pullback at 11.30. So 11.30 is pulling back into the range. ES has not yet hit, has made relatively highs of a really obvious buy side pull. We're now dropping into all of this sell side down here, and so that offered a beautiful place to accumulate a long up into this range. So that was a very key event that did shape this day as well, was just seeing how ES had a clear draw on liquidity that had not yet hit, and then we pull back during the lunch macro to take out a key sell side pull. Trades breakdown. So I'll do a quick breakdown. I already mentioned what I saw in this area. I took a long right here. I took a long essentially using this swing high and then buying on this candle's close with a nice tight stop. Caught a run up into this range, which then sold off and stopped me out, but that's fine. And then the main trades I'd want to go over is this trade here. So this is a beautiful trade. Breaking out above this consolidation high. If we mark out the consolidation, you can see mean threshold is sitting right at that 9 a.m. open. And below this impulse low, beautiful impulse low before this impulsive rally. You know that whoever chased that rally pull their stop below that swing low, which just happens to be at a very nice discount of the mean threshold. Watching for a rejection off this low, can then buy a long position when we fail to run down into this wick. That was really key with the setup, is identifying that we had taken the sell side. We had just returned to the mean threshold of a consolidation. But when we print this really long wick, what you want to be careful with around the 9:30 open is not just say, oh cool, bullish rejection. You want to identify, are we just printing this for the sake of overlapping at the very next candle? Or is this actually a really strong rejection? And the way to identify that is to wait for us to fail to drop back over that wick. So that's what I wanted to wait for. Wanted to wait for us to print that wick, which we do right there. Very next candle, slight dip, and then it just rips straight up, breaks this high. That's your market structure shift. You can then very easily buy this fair value gap. That would have been a very good entry. And then if you don't buy that, then as soon as we break any short-term high on the 5 second or the 15, right there, that is a great place to get in. Following that being a nice entry, so if I were to mark out on the chart where you'd want to buy, want to buy right here, want to buy anywhere in this range as well. And then after we do this, when we break this high, you then look back over at the 1 minute, and we now have a signature in price. And this signature is when we have a long wick, this long wick here, plus displacement. It's essentially the opposite of the long wick plus bull flag. Where we have a long wick, we then print a fair value gap. That shows that we are extremely bullish, which means that we're likely to have an outsized move. And you can see we clearly did. The day continued just pushing up all day. So at that moment, you know not to take any partials. You know that we're likely to leave these fair value gaps open. And you can continue to accumulate a position below these highs as everyone else continues to go short. And this consolidation, a really nice place to accumulate. Because of this not being as clear of where an entry would be within this range, when we have a signature like this that's showing very strong order flow, you just want to trust that order flow will remain strong, meaning that down closing candles on whatever time frame you want to see support price. So the way that you would want to play this is simply to identify the signature, identify the order flow will stay strong. We've already taken out a short-term low here, and now we're closed back above this order block, so you can buy. Simply just buy up here, anywhere inside of this order block. Catch the push up. Now for execution, very messy, and I did go on tilt on this day. So, but dragging down to here, this was before I went on tilt, and what triggered it as well, that's that long that I took. Very nice size. Was expecting to get a very high risk to reward trade. Took a partial, was up a fair bit on the day, but looking for a lot more, and then just got sort of break even. Had one more attempt and then stopped out. This is where it got a bit, I didn't do it quite right. So we had that pump up. I was expecting us to be bullish, and then we start pulling back. I'm thinking, okay, we've got this consolidation. We have trap shorts. I don't think we're going to really get below this area because, you know, there's trap shorts down there. So I think we'll just buy on this fair value gap. We'll probably just go up from here. So I get long when I see this little wick. I think, okay, it's rejecting, cool. Jumped in long and decided, I guess I'll just put my stop down here somewhere, or maybe, I don't know, down all the way down here. And sure enough, it drops straight down to my stop loss at 35, so about here. Get stopped out. As soon as it stopped me out, I recognize that's more than likely just stooping that low and ripping back up. But I knew, you know, not to jump straight back in, so I didn't. I'm going to jump for 15 seconds so we can see it a bit better. So getting stopped out right at the lows, I decided not to jump in right away. I waited. I thought, okay, I'm going to wait for us to reject. We reject, push up. I'm thinking, okay, this looks really good. I want to get long. I get long as we hit this high, and then I immediately get out. And the reason why is because I decided that actually I want to get a very high risk reward model. What's happened there? I want to get a very high risk reward entry. And so I figured that I'd wait for this model to play out, which is where I'm looking for us to drop below it and close back above. And then I would have got long with a really tight stop. Let's say we'd closed right there. I would have put my stop loss there and then, you know, caught a lot more size. The problem is that we pushed up with this aggressive candle and we never closed just above that short-term high. We continued pushing above. When that happened, all of a sudden, I was really pissed off at myself because one, I'd been too impatient over here, jumped in too early, and got stopped out. And then I had missed the trade that I had very high conviction in. And on this candle here, we'd already hit my target. I didn't have the mental clarity to step back and think, oh, we've got this signature that tells me that it should keep on pushing and I can get long up here. So unfortunately I messed up on that trade. Things I did well. The first thing I did well was I didn't jump straight back in after getting stopped out right at the low. I knew not to do that, so that was good. The other thing done well was, it's about it really. So room for improvements. First of all, if we have an impulsive move, look at the lows below it, find the swing low before it. That's more than likely going to get targeted, especially around a time of day like 9:30 open. Secondly, if I'm looking for a specific draw on price and we have an aggressive move, there was no narrative here just yet. There wasn't enough context of, okay, who's been tricked offside, who's been trapped. It was just, okay, we're expanding higher, I want to chase it. So room for improvement is wait for actual context and price. Next room for improvement, this is a perfectly fine entry on this market structure shift. I should be looking to accumulate a position and only looking to use this as an entry model if it presents it to me. Also recognizing that the model itself is actually valid as soon as we break a short-term high after having a little pullback. So a stop entry above this high could have also qualified. The next room for improvement is, as I mentioned earlier, identifying that long wick plus displacement model on the 1 minute and buying the order block as soon as we close up there, being a great way to do it. Then jumping across to, I'll just mention the rest of the day. As you can see, very ugly. There's an issue on top step X in here. So I left the charts initially, came back. I started taking just low quality trades, went fully on tilt, and I was very pissed off about missing this trade. Like, I was audibly pissed off about it, and that showed here. I was then about to chill out, but then we had an issue on the top step X platform, and that stopped me out all the way up here because it froze until I could get out, and I took a big loss. Then I figured, well, screw it, I'll take another trade, took another trade, and that just did not work out very nicely. And that spiraled. It spiraled all day. Eventually, I caught a nice long in here, somehow made 3R on this short long, which brought me back up on the day. However, if we look at stats, I'll show in a minute. But I was down on the day and down on the account, but they erased the losses from, I think, from this area here. I think they erased all these losses, which resulted in me being recovered 700 of the loss that I had actually incurred. So I take full responsibility for all these trades. And it's just a lesson on being a bit more careful of that stuff. But looking at stats real quick, that's not going to help. I actually have the stats sitting in my journal. See if that loads. While it's loading, jump across the practice account and just mention a the 11:30 lunch macro trade. This is one of the other better trades I took on the day. We'd had that, there was that long that I caught. We had this obvious intermediate term low that took out a short term low, so should not get broken if we're bullish. But then we have a failure swing and starts just going sideways just above that low. I identified that it was 11:30 time of day. Right here, that's 11:30. 11:30 drops lower. We've got this very obvious sell side down here, sell side here. Also, these relative equal lows that disrespected the midpoint of that wick. So I knew that was a very likely draw. And the 11:30 lunch macro was showing heaviness. So I went short right there and then covered at these lows here, at this low down here, and then held one runner that was stopped. That was a beautiful trade as well. But these are the stats. I'll zoom in a bit. So this was the actual stats up the top, and then the bottom is the recovered stats. And as you can see, this big downtrend in my P&L when I was fully on tilt just got wiped out. So in general, you can see that was quite an ugly day. This was before I got on tilt. I was only down 200, 220 maybe. I then just let it go. Eventually caught that 3-hour trade, which was a good trade. I was likely quite aggressive with it because I was looking to recover part of what I lost. But being down 1,200 in a day, that is really bad. And the worst thing about it is that this is the first day on this combine. So I need to be very aware of what happens if I do mess up an execution like this. This long that I wanted to catch. Just not doing it quite right, and then feeling like I missed the whole thing. It's not a feeling I should be having, because there are more opportunities if I'm just able to calmly look at price, identify, okay, well, I'm looking for the next clean framework, clean narrative, clean signature like this signature here that will offer me a trade that is in my playbook. I'll drop that back down. So that's the psychological reflection on psychological state. Lessons learned and the next steps. So the lessons learned from today were, one, patience really pays, especially with that gold trade. I was very patient on multiple occasions, and those turned out to be very profitable on my demo account because I waited for the time where the narrative became crystal clear. A lot of the time on gold it was a bit unclear for a bit, especially in this area here with this consolidation of equal highs, and also over in this area where we have what looks like to retail, they think, okay, it's a short, oh, actually it's a long, oh, damn it, it's a short. But the whole time I was patiently waiting for this, I saw what I wanted to see and caught the beautiful move. So really good lesson learned of how patience really does pay. And then the other takeaway is really just this: if we have a move that's what I'm expecting, and I feel the urge to chase, you don't chase if there's no context. There wasn't enough context of where stops would be other than below these lows. So you want to wait for there to be a clear context of, okay, well, we've enticed longs, we've taken the sell side, we're showing rejection, and now we've failed to trade into that wick. That's a high quality trade. So not chasing price when there's no context. If there was context in here that suggested that this would be a good buy in this fair value gap, then that'd be great. But otherwise not. So adjustments for tomorrow, for Monday. I'm going to start being very, very strict on only taking frameworks and setups that I can actually name, that is in my playbook, and that will prevent me from chasing anything. And like I wouldn't be chasing this. I'd be waiting and thinking, okay, well now we have this soup of an impulse flow. We have a signature, and then I can take high probability trades. Same with the 11:30 lunch macro short. That is in my playbook. I can execute it with a very high confidence and high probability. So yep, that'll do for this review. Hopefully it's a little bit more streamlined than the past ones. I'll chuck it up quickly on the screen. I've created a review program to go through my expectations, then what actually happens, influence economic calendar, trade breakdown, performance metrics, reflection on psychological state, lessons learned. That's what I'm trying to do. This is the first one using this program, so I will refine it over time and hopefully get a bit more streamlined.